following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host, David Blain. Thank you for joining us today on 94.1 FM WNBU, as well as Cable TV 10 in New Bern, North Carolina. We've got a great show lined up for you. I hope you'll be able to stick with us for the full time. If you kind of in and out, maybe driving in your car, you can always head over to our website, which is dlblain.com. That's dlblain.com. And we'll post archived copies of the show over there. You can catch up if you happen to miss part of the show. We also encourage you to let us know what topics you'd like us to talk about today. We're going to talk a little bit about banks, credit unions, some tax tips, CBO budgeting, maybe some retirement issues. So we got all sorts of great topics here, but we want to make sure that we're talking about stuff that interests you and that affects your lives. So let us know by either calling us on the phone, 252-633-0107. You can also email us here at the show, allthingsmoney@dlblain.com. And you can go to our website, dlblain.com as well, and contact us. We don't do the show live, so we rely on people to call in outside of the times, and it gives me a little bit of a chance to see what we want to talk about, kind of get a feel for what's going on out there. The first one I want to talk about was, there was a little article about free checking the other day, and it was recommending a credit union. Those of you that listen to Clark Howard, you know, he's big on credit unions. I like credit unions as well. For individuals, credit unions don't deal with businesses, so it really doesn't apply to me personally. We have too much business for a credit union, but if you're just an individual, credit unions are a great option. A lot of them offer free checking, and there's a lot of bank fees today, a lot of banks raising fees, ATM fees, checking fees, things like that. So we don't want you paying these what I call nuisance fees. And a lot of times at the bank, if you can and you shop around and ask around, you can get banking for free, but credit unions are a good bet. And one of the things that it occurred to me as I was reading this was, you know, we really do have sort of this two-system in America, and you have all these banks, which takes all the heat. And I'm not a big fan of the banks, you know, the big banks at all, and I'm really not trying to defend them, but just think about it. You have with the credit union, you have the Congressional House and Senate have their own credit union. I don't know if you know this or not. Maybe you do. If you've been around for a while, there have been a number of scandals for these credit unions of senators overdrawing their accounts for years and nobody saying anything. Anyway, but and so they have this sort of preferential treatment. The same thing, Pentagon, Federal Credit Union, and some other things. And so you have all these credit unions that don't pay tax, but yet you have the banks that are constantly, you know, having to pay income tax and things like that. Anyway, just wanted to bring that up. There's no reason to pay any fees on your bank. If you can't negotiate it with your bank, go look at a credit union. Okay, it's tax time, and I wanted to give a little tax tip today. There's so many situations out there. You know, there are people that make, you know, millions of dollars. There are people that make nothing and actually get money back from the government. And the tax code, you know, is so full of different loopholes and situations and things like that. And so I try to come up with things that apply to a majority of the audience, you know, that may apply to most people. This particular one I want to talk about today, if you don't have kids, it may not apply to you, but if you have children or grandchildren, you may learn something here. But it's the Child and Dependent Care Tax Credit. It's one that I don't want you to forget about, and it applies to everyone, no matter your income level. And so if you paid someone to care for a child, dependent, and here's where, even if you don't have children, remember it's the Child and Dependent Care Credit. So if you have a spouse that is dependent on you, you can also claim it. So it's a child, dependent, or spouse. The qualifying individual has to be under age 13 or a disabled person. You have to provide the care. Your your spouse, you have to, care has to be provided, so you and your spouse, if you're married, have to work or look for work as well. So if you're married and your spouse doesn't work, it's not going to count. Both of you have to have earned income. So, you know, if you're in a business and you lost money and you didn't have earned income, you're not going to qualify. Payments cannot go to your spouse, your parent of the qualifying person, or someone as you claim as a dependent. So, for example, if you work, you can't pay your spouse to watch your kid and have the spouse claim it as earned income and take the credit. Anyway, now here's where the credit can be worth up to 35% of your qualifying costs for of care, up to $3,000 for one dependent, or up to $6,000 if you have two qualifying people. So this is a tax credit. It's a really good credit that is available to a broad range of people. Now remember, a lot of these benefits are also offered through your employer, so there's some complicated rules if you get this benefit through your employer as far as you know, how it's computed. Suffice to say, if your employer reimburses you for dependent care, maybe you have a Section 125 plan, cafeteria plan, or something like that. Obviously, if you're reimbursed for it, you can't then take another deduction for it. So that's the child and dependent care credit. Once again, if you have children under age 13 or a dependent that's disabled of any age, it could be a older child or a spouse, an older spouse that you have to care for and pay to have care for. A lot of times those are deducted under medical expenses, but you want to look at that. Really, if it qualifies for the dependent care credit, the tax credit is going to be much more advantageous than taking it as a medical deduction on Schedule A under medical. So really look at it. If it's someone's disabled or something, it's not medical care and it can qualify as dependent care, you want to take that credit. Once again, you have to have earned income. So if you're older and your spouse does need care, but the other spouse does not have earned income, you're not going to qualify. You have to have earned income to qualify for it. But it covers a broad range of income levels and things. So that's our tax tip for the day. Take a look at the child and dependent care tax credit. Okay, we're coming up on our first break here. Not enough time to start the next topic, but when we come back from the break, we'll be getting into the Congressional Budget Office and some of their assumptions. A lot of our tax policy, a lot of our economic policy in Congress and the office of the White House is based on the Congressional Budget Office. And if you really dig into the data and assumptions that they use, you would realize that the majority of the projections and things they come up with are really sort of a joke, and you probably already knew that. But anyway, when we come back from the break, we'll start getting into some of that. So for All Things Money, I'm your host, David Blain. We'll be right back.